Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, May the 31st, 2013. And we're also closing out the month of May, and we're already into June the 1st, 2013, as I record this video. So, time just keeps on slipping into the future, and the Dow index is slipping into support. So let's take a look. Let's start off with the Dow futures on the daily chart. Normal procedure. So we've been in this sort of uptrend here for quite a long time, and we had this situation here that looked like a double top. We had a probe above the channel, and then we had another probe, and this was starting to look toppy and look like a double top. And then on Friday we had some very weak action, and that brought us into a sell-off into the close and into the breakout of this 3-4 day consolidation back in and around this area. So we closed the week. I was expecting a fairly strong close actually on the Friday, but in retrospect, it all sort of makes sense. We've it looks like we put in this sort of double top here, and the confirmation of that double top would be a break of this level here, and the normal rules for that type of pattern would bring us down, the distance of this area all the way down into the height of the double top projected down. That would bring us into this pretty key support level right in around 1408. 1408.6. So I think that's really achievable or possible, and I'll get into some of those reasons why in a minute. But essentially what you had was you had weakness going into the close. We closed right at support, and we're buried on the on the slow stochastic. You can see the fast stochastics are rolling to the downside, and we've had this divergence for quite a while that is starting to play out, where the MACD was already rolling to the downside and looking weak. So you've had some unusual volume come in and around these areas here, and you can see when you spiked in here, this has obviously created some resistance in there with that sort of high volume area coming in. So let's just kind of fast forward. I'm looking for a move. You've got your stochastic buried here. It wouldn't be unusual to see a little bit of a bounce coming into let's say Monday, but ultimately what I'd be looking at is let's say maybe a little bounce and then a test of this channel. And then what I'd want to see is if this channel is going to hold support and push off and get something bullish going back to the upside, or if we're going to fail that channel and then push into some of these lower levels. So let's take a look at that, some possible lower levels from some other perspectives. Let's look at the that's not the right tool. Let's look at a Fibonacci perspective of this last swing low to swing high and see where that would bring us. Okay, so you've got some confluence in these areas. You've got a 50% retracement, which is a normal market retracement of this last swing from this low to this high, would bring us in and around the bottom of this channel, the bottom of this trend line, and the 618 would bring us right into this 1408 level. So this area, this zone is looking like a potential magnet for some tests a little bit lower. I wouldn't try to hazard a guess to think what the market might do after that, but I think in the short term that's sort of what I'm looking at. And coming into Monday, I'm going to be cautious, maybe looking for a potential bounce, and then looking for weakness and potentially looking to play the short side of the market on an intraday basis. I'm not really interested in getting swing long at this point in time. However, having said that, let's take a look at some other charts. And let's look at the market from the perspective of seasonality. So just taking a look at what we have here, I'm just going to explain this quickly. So this is a seasonal performance of the Dow going back. This chart is going back 5 years, and you can see that over the last 5 years on average, we've pulled back between the months of May and June. So May and June have been statistically over the last 5 years have been weak months. and then you can see that things start to pick up like the middle of June on average. I mean, these are just averages, and you can't always go by history, but at least it gives us a reference point. So, then you pick up, let's say, the middle of June, according to this chart, and you start to push to the high side, and then you have July, a fairly strong month, statistically speaking. So if we look at over the last 10 years, you can see the same sort of, this is a 10-year seasonal analysis. You can see over the last 10 years, May and June are typically weak months as well. So, over the last 5 years, over the last 10 years, and then you can see here's an overlay of the last 5 years and the last 10 years, and you can see right around this period you've got April. This is the beginning of May, right? May, June, and then July. So you can see that into July, and then you can see into July you get some strength from a historical seasonal perspective. So I think that what we're looking at in terms of the recent market action going into Friday, I wouldn't be surprised if this history sort of played out and sort of repeated itself, and that might bring us down into some of those support levels. I hope that makes sense. It's kind of a long explanation for the fact that I'm just looking for a pullback into support. Now, this we're kind of long in the trend here. That's why I'm cautious. Normally, I'd be looking, to say, okay, if we pull back into support, I'd be looking to buy it. But at this point in time, we're so long in this trend that, a move back into the support level, I'm not sure that it's necessarily going to hold. So I'm going to be very, very cautious about that. Let's look at the S&P futures. We had the same sort of situation where we had a pullback just below the 20 period moving average. Now we haven't closed below the 21 exponential moving average in quite some time, and we did that on Friday with a very weak close. Let's look at the Nasdaq. So the Nasdaq closed right in and around the 21 exponential moving average. You can see here we bounced and we put in a minor lower high here. So now you have this sort of situation going on where I'm not sure why that is. Let me see here, style, weight. Let's make this a little bit thicker and set it as default there. So, you've sort of got that situation going on here. So I would be looking, for potential weakness if we break the 21 exponential moving average. You can see we've been talking about this sort of cup pattern for a while here on the Dow with this sort of handle and then the breakout. We tested the 1272 extension. We tested, halfway, just over halfway between the 1272 and the 1618. As far as I'm concerned, that move is now finished, and we'll need to look for some fresh signals to look at what we're going to do in the market here. At this point in time, like I said, I'm expecting a little bit of weakness potentially. Let's look at the transports, and I put in the wrong signal. $TRAN. Okay, so if we look at the transports did the same sort of scenario where we had this sort of cup pattern. Let me just grab the pen. We had this sort of cup pattern. We broke out of this extension area, these highs, and we tested the 1272 extension and the 1618 extension of that move. That move is pretty much done, and now all we've done is pulled right back into support, which coincides with this breakout level of the cup and these recent highs. So at this point in time, you've got your stochastics buried. We could have some potential indicator support there, or at least for a minor bounce. So what I am looking for rather, is this sort of move is done. So I'm going to delete that off the chart, and I'm sort of looking at, I'm looking at this minor downtrend line. We're into support now. What I'd like to see happen, or what I'm looking to see happen, is this sort of scenario where we go boom, and then we fail this level here. So that's what I'd be looking at. And then in the short term, I'd be looking for a pullback potentially into, let's see. Yep, somewhere around here, which coincides this 618 at 61.35 in this index, the TRAN, cash sign TRAN. That coincides with this congestion level and some of these sort of breakout levels here. So I don't think that that would be, a far stretch. That's what I'd be looking for. If we break back up above that trend line, then I would not be looking for short. So that's sort of the where the rubber meets the road, looking for a little bounce and then a break of 62.91, and then I'm looking for a test of 61.35. Hope that makes sense. Let's look at some other markets. Let's look at the 30-year bonds, and the 30-year bonds are at a really really key level here. Let me delete off some of these fibs that we no longer need. Let's look at this trend line here. We should have been in a period of seasonal strength in the bonds, but there's obviously some bigger forces at work here. And the key level that I'm looking at, I'm not sure why this chart's not maintaining my key levels, but let me just redraw this here. These lows are pretty key levels. So if I zoom the chart out, you can see where they come into play from a support resistance perspective. If you're not familiar with how to determine support resistance, this is a great way to look at the chart from a support resistance perspective. They're not exact levels, but you can see these zones here. You see where this level here was resistance at one point. Let me actually change the color of the pen. At this point, when we were trading below it, we had a zone of resistance right in this zone here. And then when we broke up above it here, you can see that this was a decisive break of this level, and we traded above it. This looks like a sort of complex top, but you can see anytime we come back down into this level here, this is now support. So we've tested it once, twice, 3 times a lady, and then we've got 4. This is the 4th test of that level. So I'm looking at this market from a couple of perspectives. The first perspective I'm looking at is that we could have a potential bounce off of this level into resistance, but then ultimately, so I'm considering a potential short-term short or long trade rather off of this support level, but I'm very cautious because we've really tested it a number of times. So what I'd be looking at here, you've got the stochastics rolling back up to the high side. It is net negative, but I'd be looking for maybe a little bounce, maybe into the 20-period exponential moving average or 143 and 9/32-ish. But ultimately, if we break this trend line and we hold, that's fine. We're going to hold those levels. But then what I'd be looking at is this scenario where we come back down and break this level again. And the decision points are essentially, if you want to look at a short-term long, that's what I'm looking at, is maybe a potential short-term long off of this level. And then when we come back down, potentially through this level, I'd be watching to see if we break this level, and I'd be looking at a potential short. So this level here, 139 and 20/32 in the 30-year is where the rubber is going to meet the road here. That's the major key support level. And I think that's where a lot of activity is going to take place and where a lot of people are going to, pick a side. It's probably going to be an area of contention for the time being and an area of tug of war. But in the short term, I'd be looking for a little bit of a bounce. And then if we come back down through there, I'd be looking, to see if we're going to get something going to the downside. Now, if we get something going to the downside, watch interest rates and keep an eye on interest rates to see if interest rates are going to start climbing back to the high side. So this is a really key market to watch right now, and I'm going to be keeping a pretty close eye on it. I'll at least be watching it, to see if I'm going to potentially take a trade next week. I'm a little bit cautious on this market in general, but if not, I'll be watching it to see if interest rates will be going higher. At any rate, I'll be watching it from either perspective because both perspectives really affect a lot of my decision making going forward on both a personal and business basis. So let's take a look at the 10-year just to round things out a little bit. And you can see that the same sort of situation happening there where you have, it's not a clean level, it's more of a zone. You've kind of got a zone here, but I think the lower end of that zone is right in and around Let me just mark this level right in around 128, 21, 128.21. So I'd be looking for, this same sort of, the analysis that I just did on the 30-year is essentially the exact same analysis on the 10-year. So we need to watch the 10-year and the 30-year. They're both sort of moving in lockstep. So now let's look at some other markets. Let's look at the crude oil. So crude oil, I've been waiting for this potential break up to the high side, and we're just sort of in a consolidation pattern. And at this point in time, we're sideways. And unless we get above 96, 96.54, 97-ish, I'm not really that interested in it to the high side. I'm not really interested in it to the low side. So there's really not much going on there. Let's look at natural gas. Natural gas is, pushing right back down into some of these support levels again. I don't really have a lot on it. I wouldn't be surprised to see us at this point in time if we're going to break, this low. I wouldn't be surprised to see us come in and tag the 618 level around 370. 370 has been a key level, a key support resistance level, going back in time. In fact, I'm going to mark that level on the chart so that we have it going forward right around 370. Because at some point we'll be taking those fibs off the chart when they're no longer relevant. And what I'll do is just mark that level there so we have it. So I wouldn't be surprised to see crude oil test 370. I also wouldn't be surprised to see it do this, hold support, and then push back up to the high side. So, from that perspective, there's really not a lot to do on in that market at this point in time, from in my opinion. So let me just take a quick drink here. Excuse me. Okay, I just paused the video there and I started recording again, and I was babbling on and on and on. I thought I had some good stuff there, and it turns out that I, for whatever reason, stopped the recording instead of restarting the recording. So let me see if I can go back and figure out, what I covered here. So here's, let's look at crude oil, and I'll try to kind of whiz through it because I already kind of said this stuff, and hopefully I'll, catch the essence of what I was discussing before. So crude oil, we've got resistance still overhead. We're just essentially now we're just sideways in crude oil, unless and until we can get above 96, 64, 97. I'm sorry, 96.84 to 97. I'm not really interested in crude oil to the high side. It's just really sideways. Let's look at some of the metals. So I'm going to recap something I'm doing here in gold. So here's the gold trade. I'm still in a small position in it. I may be a little bit early to the party here. I was doing some research over the weekend, and it appears that gold has a yearly seasonal strength, a historical seasonal strength time of, July the 1st, essentially. And June is normally, historically over the last 5 to 10 years, a weak month. So we may be early to this trade here, and I may be looking to, to see if we can get anything going in July if this trade doesn't work out. But essentially what we're looking at here is we had this double bottom here, and we were anticipating a break of this trend line, which we had last week. We were anticipating a break of 1403. We got that last week, and we moved into about 1420. At that point, my position was up fairly decently, and I was up and down last week. Now I'm sort of flat to slightly down, but all we really did was come back, break through this trend line here, find resistance at the 21 EMA. That's this white line here, the 21 exponential moving average, the downsloping 21. And we pulled right back into the lows and into the top of this trend line. So at this point in time, I wouldn't consider that decisive. And from a technical basis, I think we're still looking decent. We're holding that minor uptrend line, and what I'm looking for is if we can keep things going and we can get some momentum going back to the high side. I'm looking at 1380 as possible support. That's really where the major support to this trade is. And the next level of support is the below the lows. So if we do something like this where we come down and we just do this, or we break the low, this low, I'm just going to get out of the trade. At this point in time, I'm looking to see if we can get back up above 1403. The next challenge point is going to be around 1438 to 1440, and then ultimately 1479. And then if we can get above 1479, I'm looking at 1500 to 1525-ish. So I may close the position out if we can get back up into 1479, although to see it break through there, we'd probably get a quick move if we were able to break through that level. So that's all I really have in gold. Let's look at the gold's sister. Let's look at silver. Silver looks weaker to me than gold. It's just sideways, but it's holding in and around those lows. It's putting in a pretty decent long basing pattern. Let's look at copper, which was one of the reasons why I'm in the gold trade, because it looked to me like copper was sort of leading the metals. We put in a double bottom. We broke this trend line back to the high side. And you can see here we put in a lower high, put in a minor higher high, and now we're just going sideways. At this point in time, we have a really, tight, 5 to 6 day range here. And what I'd like to see is this is a really good area to establish decent risk to reward because you've got a support level in here. I'd like to see it break back up to the high side above that narrow range. So that would bode well for the gold trade. Now let's jump over and look at some key currencies. Let's look at the dollar index. So the dollar index is right back into support. We pushed higher and we pulled back into this sort of minor trend line here. As long as we're holding 82.50 and we're holding this trend line here, the dollar index looks more bullish than bearish to me. Let's look at the euro. The euro is right back in and around $1.30. Surprise, surprise. $1.30 resistance. So at this point in time, I'm going to be looking to see if we... Jeez, I keep doing that. I don't know why it keeps moving that if I have this selected. But at any rate, so we have this sort of trend line going here. I don't know why this platform provider, TradeStation, I don't know why they don't have an undo function when you when you move these indicators, because it happens quite often and it's a little bit aggravating. Okay, end of rant. And let me just move these back to where they belong. Okay, right in around there. So essentially, if the euro can get above this trend line here, then I'd be looking at a potential reversal in the euro, because and back up above $1.30 key resistance, because we put in a slightly lower high here off of this minor double bottom, and there's your key resistance in order to get anything going back to the high side. So going to be watching the dollar index versus the euro going forward, as we usually do. Dollar index at support, euro at resistance. Nothing new there. They're breakdance fighting every week into the close of each week. So let's look at what's another good market we can look at. Let's see, we looked at natural gas, crude oil. We looked at the 30-year, the 10-year, I believe. Let's look at, we looked at gold, silver. Let's look at one other market. Let's look at the USD CAD. And the USD CAD in the Forex market, it broke out of this sort of triangle wedge pattern that we were talking about last week. We had a couple of potential targets that we're looking at in terms of standard measure rules for these patterns. One would bring us into about $1.05. The other one would bring us into about $1.76, $1.08-ish. So that's still in play. We'll be looking to see if that will follow through. Oh yeah, that's what I wanted to look at. I was looking at the soybeans because a couple of guys in our room, they look at soybeans quite often. Sometimes they trade them. One of our traders is looking at the JJG, which is an ETF based on the agricultural space, And one of the things that I was looking at over the weekend, I was looking at the seasonality of the grains, and I'll get to that in a minute. But if I look at some of my traditional signals, I'm just going to refresh them. View, refresh. Here is looking at the corn on the daily chart. We had a Darvas squeeze to the long side. A Darvas squeeze to the long side with potential targets. I hope this platform does not crash on me. Just bear with me 1 second. It's just reloading the data. Okay. With potential targets higher, we broke this Darvas box while we were in a low volatility environment. We have potential targets according to this methodology of, let's say, 697.75. Okay, close to 700 even. So that to me looks interesting, especially when, in perspective of the fact that soybeans look really strong to me here. We had a breakout on the daily chart. This middle chart going back over a week ago, and the target was already met. Right in around this area here, we broke out and we just went higher. But now what we have is the confluence of that, the corn, and this weekly signal, which these weekly signals are pretty powerful signals. So we've had this really long base, and we've broken out of this base with the Darvas squeeze at around 1450 in the soybeans. And we have potential targets as high as, 16, 17, 25 in the short term. So to me, that looks really interesting. Guys, if you're listening, this is something I was looking at over the weekend. Now, from that perspective, I'm just going to look at wheat as well, and then I'm going to jump over to the seasonality. Wheat doesn't look as strong, but it looks like it is, setting up a sort of basing pattern, and it's sort of breaking this minor downtrend line there. So I'm just going to pause the video and set up the seasonality chart so we can take a look at, the historical seasonal strength in the soybeans. Hopefully I won't actually stop the video again. So let me pause this video and then I'll flip over. Actually, you know what? Forget it. Let's just flip over. So I just don't want to make a mistake there. Apologize for the indecision. So here are, let me just set this up. So that's the soybean continuous contract in the futures market. Let me just align all of these charts. Apologize. I need to find a way for this to do it automatically. Okay. Cancel. I apologize. Just bear with me 1 second here. So we're here. Okay. So that is... Okay, let me just format. Okay, so essentially what we're looking at here is we're looking at the soybeans. Not sure what happened here. Let me just change the settings here. I'm not sure why it resizes every time I change the symbol, but by any means, let's just move forward with this analysis. So we're looking at the soybeans here from a seasonality perspective. And essentially what you have is May is typically a weak month. But if you look at, some of the strongest months in the soybeans are historically over the last 5 years at least. This is a 5-year chart. Let me just grab the pen. Is June and July. So if you look at the chart here, right into the from May to June, essentially you have on average this sort of up move. And if you look at it on the 10-year scale, you have, the same sort of scenario here where you have strength from, May to June, and then you have a little bit of a pullback. So this to me looks like it has the potential to be strong until at least the middle of July. Okay, so anything related to the agriculture space might be something that I'm going to be something that I'm going to be interested in looking at. Let me just mark this on the chart. We've got, right around this area here, which is the middle of July. So essentially what I'm going to be looking at, I already essentially have buy signals from the confluence of different methodologies that I use on some of these some of these symbols. And what I'm essentially looking at is, I know from the 5-year perspective and the 10-year perspective that June and at least into the middle of July are essentially, strong months. So I'm looking at, potentially a month and a half, possibly 2 months, depending on how it acts, of, to have the potential for a fairly strong trade. Now, overlaying the 5 and the 10-year historical averages, you can see the blue line is the 5-year and the red line is the 10-year, around, the middle of, this is April, May. Okay, so from May, to June, this is April, this is May, June to July, you've got this sort of strong period in and around here as well that you can see. So it's all part and parcel of the same, analysis. So that's sort of what I'm looking at. And, this is what the soybeans is doing now. It broke out of this trading range, as was denoted in the Darvis box on, the previous chart we showed. You can see here, this is just the 10-year, the same as this. And you have, some, May was sort of on average flat, and then you're getting into June, and July. So this is the area that I'm looking at over the next 2 months. It looks really interesting. Let's look at a couple of other charts just to get an idea. Looking at it from a different perspective. This is, this is some back testing that was done on the soybeans chart. And, you can see some of these trades that took place based on, this move. This was back in 2012, back in April, roughly the middle of May, April, the middle to end of May into June and July. And you can see here we had a pretty decent move to the high side. And, we have a new signal based on the back testing results of this system here. And you can see here, this is how Don Vialou looks at the market. You have, you're trading above the 20-period moving average. That's a technical rank of 1. You have your relative strength. In this case, I'm relative to the S&P 500. Using that as the benchmark, we're outperforming. That's what this indicator is telling us here. And, if you buy into the fact that we're into an area of seasonal strength there, then, all systems are go. It's just a matter of, how to trade it. So we were looking at the soybeans, and we're looking at one of our traders is looking at the JJG. So if we look at the JJG, for example, let me just link this and link it over to the JJG. So the JJG, if you look at it from that perspective, I believe it follows the futures markets pretty closely. You were in this downtrend. We just recently broke above that downtrend, and you can see we're now starting to put in a bullish pattern of slightly higher highs and higher lows. And, we're struggling below the 200-period moving average, but we've had a 20-period moving average cross above the 50-period moving average, and we're starting to outperform versus the S&P 500 from a relative strength perspective. So I like this. I like what I'm seeing here, and I'll be looking to essentially look to possibly set up a small position to take advantage of this potential area of seasonal and technical strength. So I believe I covered most everything that we were thinking of covering, and that's all I really have this week. I may have missed one or two instruments, but this video is already it's already gotten rather long, so I'm going to stop it here. If you have any questions, feel free to email me through the meetup groups, or you can email me at this is my personal email address if you have any questions. DDimarc, some sloppy writing, DDIMARC at, oh, that's some terrible writing with the mouse, at gmail.com. So that's ddimarc@gmail.com. So that's all I have. I hope it helps, and good trading, and we'll look forward to seeing and or talking to you soon. All the best.